You know what the hardest type of trading day is? The inside day. That's what we're going to talk about in today's video. Hey, this is Tim from EminiMind, and inside days are super challenging days to trade because we have lots of constraints on the day, as well as lots of prior trade from the days prior. So let's jump right in and talk about the today's trading day. And if you'll notice first, the top of today, now that we are halfway through the day, has now broken out above yesterday's high. So that means today is no longer inside of yesterday. However, if we go back another day to the left, we can see on Tuesday, the bigger body selling day here, its high and low encompasses today's high and low as well as yesterday's high and low. So anything within this range, which is a pretty big range, is going to be considered an inside day. So when we opened today, if I drill down to a smaller time frame, when we opened, we were within yesterday's range. So you can see here, yesterday's high to yesterday's low. And anytime we do that, we are more than likely not having a huge gap. And you can see today we had a small gap up, came down, didn't quite fill the gap from yesterday, and then we got our bounce. And then from there, what I like to do is look at the first 30-minute range and mark essentially the high and low for the first 30 minutes. When we're already inside of the prior day's range, if we stay within that range, and then we stay within the 30-minute range from there, it's pretty much just a sit-on-hands day, likely not much to do. If the range is very, very big, let's say yesterday's range was 100 points, and then today's 30-minute range was also really big, let's say 50 points. Okay, now we might have an opportunity to short at highs and buy at lows, but you don't want to be doing anything in the middle of the range if it's very, very small. So today, you'll notice that on the rally off of lows from the morning, we came up and broke yesterday's high, and that put today's 30-minute high just above yesterday's high. But keep in mind, 2 days ago, Tuesday, was that bigger candle, which we are still inside of. So now that we've kind of fallen back down to the inside of the 30-minute range, we can go ahead and draw the full halfway back of the day. And one thing that was interesting about this morning is that our breadth and advanced decline line were actually very strong. We were at like 5.5 to 1 before we had even broken out and moved into new highs on the day. So when we are in an inside day, or if we're just inside the 30-minute range, it's helpful to look at the breadth and the advanced decline line because they can indicate which way we might break. And if the breadth and advanced decline line are really bullish, then that's indicating that there's a lot of volume going into up stocks and there's a lot of stocks that are actually going up. So we have a good chance of breaking to the upside. And that's what we saw today. The other thing you can lean on is the nicey tick and look for, if you're going to be range bound, look for high ticks to be shorting and low ticks to be buying. If it's a trend day, you can still buy in low ticks, but it may not be the lowest tick of the day. And on Monday, we just finished up with our masterclass. I'll put a link for that below in the description, where we talked about the nicey tick and using the 30-minute range in conjunction with the nicey tick. So that's a really good course to go through if you kind of want to expand your knowledge on basically all things trading here, especially nicey tick in the 30-minute range. So today, because we broke to the upside, and then we had this little pullback to the top of the 30-minute range, which is this gray line up here, and because the breadth and the advanced decline lines were very strong, and because we broke above yesterday's high, go back a little further, which was here, I did take a little long, and that was right on top of the 30-minute high. I haven't really had a ton of trades so far this week. One on Tuesday, two yesterday. Well, one Monday, one Tuesday, two yesterday, and then the 15-minute breakout today just kind of broke to the downside briefly and then turned around, so there wasn't anything there as far as a 20-point winner. Did have a 20-point winner on Monday, and then today's little breakout here, or today's little move broke out to the upside. And this one, maybe not the cleanest of long setups, but one thing I want to point out is that the low, the pullback where we made, when we made the pullback, I noticed that we had a new low tick on the day, and we were actually trading up here, just off of highs. So we had this up move, kind of a bull flag, where we go straight up for a couple of bars, and then we move sideways. The top of the 30-minute range was acting as support, and when we came down to that 30-minute range, I just looked at kind of these recent swing highs. I was kind of drawing the retracements down like this on the way down. And so technically we broke that 61.8. But the reason I say it wasn't the cleanest is because we still did have a full opposing intact where we didn't break that 61.8. But because we had the low tick and we were right at the top of the 30-minute range and the breadth of the advanced decline line was pretty strong, considering we were in inside day, I went ahead and took this little long here, and it did end up getting a nice strong pull. When the market does that, so I always start by, like when I'm to trail my stop, I will start by drawing up the next retracement. So take from the 50 near the entry near the 50 up to the negative 23. But then you put your stop down below the 61.8, and then it keeps running higher. If you were to just keep extending your anchor point up like this, your stop ends up actually pretty far away from price. Let's say you went all the way up here. Your stop's down here at like 39.69. Price is up here almost 10 points away, up at 76. So what I like to do in these situations where you do get a little lucky and it rips on you, you can just come in and trail your stop, a tick or two below each candle, and as best you can, because these candles, this was 8:21 when it filled, and then by the time it was up here, it was only 5 minutes later, 8:26. So these candles are forming pretty quickly, and so I'll just take my order and just kind of hover my mouse over the tick candle here, and then just take the low point and just keep dragging up on my trade ladder as best I can. And so I ended up getting out up here. I think it was a 75, 39.75 up here. So just below the highs, and that's fine. Catching a fast move like that, especially on a week where I didn't really have a lot of, I didn't really have any big runners. I had the 20-pointer on Monday from the 15-minute breakout, which I can show you real quick. That was here. Yeah, Monday was a big selling day, so that was just a break below the lows, and that got a 20-point move pretty quickly. But then Tuesday didn't really have much, and yesterday was just two small trades that went for their 3-point first target, and then like a half a point on the second half of the position. So nice to get a little bit of a pop here. Now next week we have the Fed meeting announcement on Wednesday, and we have rollover. So I'm going to continue my cautiously conservative bias here going into the week, as far as not being overly aggressive. This long here today I felt like was the most aggressive trade that I took this week. But gonna want to watch out for that Wednesday Fed meeting announcement. And then the last thing I want to point out, on Tuesday in the live trading session, we talked a little bit about buying puts as we come up to. So we've got the full halfway back on the daily chart. Now we're on the larger time frame, the daily chart, and this is the full halfway back, 41.55. But if we go down to the daily in the last few days, we did break the swing low back here, and I got my little trend line chart saved. This was the swing low that I was more concerned about breaking down here at 39.13. This swing low is technically the most recent swing low, so I am going to draw up the next daily short like this, and it's a 40-15. And if we rally either today into the close or tomorrow, I'm going to look at buying puts just a week out. So next Friday, I'm going to try to go super cheap, super short term, just a little bit of a hedge in case we get a sell off on Wednesday after the Fed meeting announcement. But otherwise, Thursday morning, I'll likely close them out. Usually on the Fed meetings like that, unless we have a monster rally where I have to just get out on Wednesday, which usually, if you're getting in ahead of the meeting, you can be positioned a little bit better for the meeting itself. So, but ideally, I'll hold them till Thursday in case we get a gap down, close them out there, and then call it a year for hedging puts. I don't like to carry positions into the new year. Just it's simpler for tax purposes and everything. And we usually get a Santa Claus rally going into like the third week of the month of December, which is coming up on next week. We've got expiration, and then the following week is the third week, and that's the week going into the Christmas holiday. So with the way the market reacted a couple weeks back on when Jerome Powell spoke about only raising interest rates 0.5%, we may not get that big sell-off on Wednesday like we have had for the last handful of Fed meeting announcements. But I'll put on a little put hedge just as a little bit of insurance, and I'll look at that 40-15 level to do that. So if you have questions, drop them in the comments below. I'll link to the masterclass if you want to check that out. I hope everyone has a great rest of your week, and I'll talk to you all soon.